All right, let's talk about scaling in respect of targets. How does scaling in and out of trades help you as a trader? Now, I read a thread on a bulletin board many, many years ago which said scaling is inferior behavior. And I remember looking at the title of that and thinking, you know what? In actual fact, it makes sense. What he's saying makes sense. Now, the reason that makes sense is because if you've got a target here and you've got here and you're taking your trade out all the way up to the target, it makes sense in that why would you do it when that's your target and you're structuring the trade around that? And that's logical, and it makes, to me, it seems quite a sensible thing for him to say. However, in the real world of trading, guys, there's plenty more things that come into play than that. I am a massive fan of scaling. I have used it all throughout my trading career. I continue to use it. Very rarely do I go just all in and all out of position, because I do not feel that you can be that precise with it. But then again, I know people who think that scaling is a waste of time, so each their own. Let me talk about why I think it's good. I think it's good because a couple of things. One is you give yourself the opportunity to profit from an extended move. Let's say you're in the long position here, the market starts to run, it starts to pull back, it starts to run, whatever. Let's just say that, and you're long from. Let's say if you're long from here for whatever reason. If you're scaling into your position, let's say it moves in your direction, you end up scaling a little bit on this first kind of bull flag area or the first resistance area. You don't, it's a bull flag yet, it might be a resistance. You take some off, fine, it moves up further, you take some off, you move some of you take some off. Now what that does is it allows you to stay in the trade for a longer period of time. So if it is a trend move, yes, you aren't in full size and you've probably only got a handful left for the latter part of the move, but it allows you to stay in for that. It also allows for it to come up, go in your direction and completely reverse. It means you're taking some off the table. Now, why is taking some off the table good? Okay, from a pure monetary perspective, it's good because it means that if you're wrong on the trade, you're still hopefully making some on the trade, or you're not losing as much. But from the more important perspective for me is the psychological aspect. The psychological aspect of, listen, the market's moved up a decent amount here. I think there's a perfectly valid reason for this to be the end of it, or the end of the move. So I want to pay myself for being right and not have to battle in my mind with this whole right or wrong, because you've got two scenarios. If the market comes up here and you take the whole thing out and then it carries on, you may well be thinking, I should have held it. I knew that had a little bit more to go. I knew I should have held some. Fine. The other scenario is, it comes up here, you don't take it out, you say, I'm going to hold it this time because I think it's going to go further. It comes all the way back down here and stops you out. You have then got this yin and yang in your mind of saying to yourself, hey, I should have held it, I shouldn't have held it, and that's going to change depending on what happened. And it takes a long time for you to kind of neutralize that in your mind and say, I should have held it, I shouldn't have held it. It's not always the right or wrong, definitive right or wrong answer. Sometimes you're right, sometimes you're wrong. But over time, you're hoping to be more wrong than you are. You're hoping to be more right than you are wrong, of course. So what you can do is you can automate that and say, listen, if it goes there and it goes to a level that I think I've already predetermined is a good level, I'm going to take out half the position. I'm going to take out some of the position. That way you don't have the conflict in your head. The position goes half off or wherever it is done, and you can say to yourself, okay, if it goes back there, I don't mind. If it goes further, I've still got some more. So yes, you're not making the full meat of the trade, and yes, you've got to be careful that you aren't scaling too early on and just really all of a sudden it goes in your direction, taking some off, because you're going to then reduce the you're going to be full risk when you get stopped out, but not full position when the market is going in your favor. So that's kind of one way of looking at it, and that's quite good. As if you're not perhaps sure on the trade, it's a substandard setup. Not recommending you take substandard setups, but perhaps it's a setup that's not quite as good as you feel. You've spotted a good kind of impulse move that you want to take some off on. So again, it's that you can adapt it. You can say to yourself, listen, this is a chance of me getting the whole move on the day. I'm not going to touch it. I'm not going to scale. I'm not going to start to get out of the position until it's way above. Or you can say, listen, this This is a kind of bit of a scalp play. I might have the end of the trend here, but I recognise I've definitely got a sort of vacuum position here. I can take it, look for the pop back up, take the scale off, and then if it works out, I get some more. If it doesn't, I'm not happy.